Welcome to the daily insights that matter. EV companies have come under the scanner again, but this time for alleged misappropriation of the FAME subsidy for electric vehicles. FAME, which stands for Faster Adoption and Manufacturing of Electric Vehicles. Electric vehicles manufacturers have been alleged for lowering their electric two-wheeler costs to make them eligible for subsidy. By doing so, they have falsely claimed at least 300 crore subsidy. Let's discuss this. The FAME scheme was introduced as India's flagship program to increase manufacturing and supporting the adoption of green mobility technology through the reduction of upfront costs. As you can see in the chart, in the recently announced budget, Finance Minister allocated rupees 51.72 billion, approximately $631 million towards its flagship scheme. This is an 80% jump in the budget allocation from the previous year. Under the FAME program, subsidies cannot be claimed for electric two-wheelers that have an ex-factory price above 1.5 lakh. So what are the allegations? To keep the ex-showroom cost below 1.5 lakhs, firms have started pricing the charger and performance upgrades separately, over and above the ex-showroom price. In simple words, manufacturers are lowering their electric two-wheelers to make them eligible for subsidy. Electric vehicle makers can claim subsidy only if the price is below the threshold of 1.5 lakhs. Owing to this, they have started billing the chargers and proprietary software separately. Additionally, EV two-wheeler market share has dipped to 5% in Jan from 5.7 owing to a halt in FAME subsidies, the rising cost of EVs and supply chain disruptions. So far, out of 64 OEMs registered under the FAME 2, at least 17 have been debarred from seeking subsidies. Currently, the Ministry of Heavy Industries is widening the scope of investigation and has asked top OEM to explain the pricing. The shareholding of domestic investors, both institutional and individual, hit a record high of 24.44% in NSE-listed firms during the third quarter of the financial year 22-23. This was the fifth quarter in a row where domestic holdings have increased, indicating the rising dominance of domestic investors. Domestic investors refer to the Indian institutional and retail investors who are investing in the financial markets of India. FII, or foreign institutional investors, is an investment made by an investor in the markets of a foreign nation. When we look at the breakup, within the domestic investor category, holdings of mutual funds rose for the sixth quarter to an all-time high of 8.9%, while the holdings of insurance companies reached a 5-year high of 5.65%. When we compare quarter over quarter, while mutual funds and FPIs have increased the share in the December quarter, compared with September, shareholding of retail, insurance and HNI slightly fell. An increase in domestic institutional and individual investors' share in NSE companies can be seen as a positive development for the Indian stock market and investors. Here's why. Domestic institutional investors are large financial entities such as mutual funds, insurance companies and pension funds. Their increased participation in the stock market is seen as a vote of confidence in the market and the Indian economy. This can lead to more foreign institutional investment and a general increase in market confidence. The rise in domestic shareholding could be attributed to rising expectations, easing inflationary pressures, and the resilience of the Indian economy compared to global peers. So what does all of these news mean for you? Though EV penetration and volume have largely plateaued across segments, implementation of stricter norms and price caps will appeal to the mass. While the phasing out of internal combustion vehicles and enormous subsidies provided by the government, we expect the market share of EVs to rise significantly in the coming years. This will have an indirect neutral impact on you. The trend of more and more domestic investors investing in Indian stocks is on the rise. Their heightened involvement in the stock market can be perceived as an expression of trust in both the market and the Indian economy. This will have a direct positive impact on you. While I say this is me, Rahul Hassan, signing off. Have a great day and take care.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.